If we take the prohibited activities you need to know for the SIE, we can split them into two categories: those that a registered representative can't do, and those that nobody can do. We get the acronym Gossipable Vipers. For this video, we're going to focus on the things that nobody can do. Nobody is allowed to manipulate trading volume. You should know the term painting the tape. It's where somebody's placing trades often on both sides of the market just to increase trading volume. Also, wash trades. That's where you're buying and selling a security to yourself just to increase volume. Maybe you're going from your individual account to a joint account, all for the purposes of increasing trading volume. Insider trading is a huge no-no even for people not in the business. We'll do a whole separate video on insider trading, but just know it's when you place a trade, either a buy or a sell, based on material non-public information. Price manipulation includes any activity where you attempt to manipulate the price of a security. Testable for the SIE, you should know marking the open and marking the close. Marking the open is where you place a trade on the market open to move the price a certain way. Marking the close is where you do the same thing, but at the end of the day. Maybe you need the closing price to be $10 to hit a performance goal. The stock is currently at $9.90, so you execute a trade at the close to push it up to $10 just for the price change. Next, we have evading payment for a trade, also known as free riding. I open a new account with a brokerage firm. I haven't deposited anything yet, but I go ahead and place a $100,000 buy. Price goes up a little bit, and I sell the stock for $101,000. I get a nice little $1,000 profit. The brokerage firm tells me I need to deposit $100,000 to cover the buy. I tell them I already sold the stock and netted more than $100,000. They say, well, we can't use the proceeds from a sale to cover a buy. That would be free riding. When this happens, the firm must place a credit freeze on the customer's account for 90 days, meaning that the customer must deposit 100% of the cash up front before they place any other buy orders. You'll notice the 3 calendar months to help you remember 90 days. You also can't go spreading rumors to influence a stock price. It's illegal to buy a stock and then go spread false information to get the stock to go up. Also true in the reverse. You can't take a short position in a stock and then start making up false rumors about the company to drive the price down. A common tactic is known as a pump and dump. That's where you buy a stock, usually with low trading volume and a smaller market cap, and then you go hype the stock up. As people start to go out and buy the stock, driving the price higher, you dump the shares that you previously bought on these new buyers at a higher price. Spoofing is when you place orders but have no intention of executing those orders. You just want it to look like there's excess supply or demand. Generally, this is done with really large orders. You're trying to give the impression that somebody out there has a large block to either sell or wants to buy a large block of shares. So those are the prohibited activities that nobody can do. If you have any questions, leave them below. Otherwise, we'll catch you in the next one.